I'm going to tell you very quickly the most important things of this market if you want to enter long in this area. First thing, we have a downtrend, and this is very clear. Why? Because if you check on traps, and you probably know what's a trap. If you don't know that, you can check on my video. This is a trap, this is a trap, and we have another one, and this is another trap, and we have a huge downtrend. This is one of the most important things, so be very careful. Second thing, if you compress your chart and you look left, you could see that there is a very, very important level here, which is a very, very important resistance and support level. It was resistance, it became support, and now it could become resistance as well. That's the second point. Third thing, you could check on measure moves. So there is one leg. So this one is one leg. If you go like this and check on the second leg has been finished, but a third leg actually, which is still not finished. So I expect price to come down to this level here, and then we can see if we could go long. There is another important characteristic, which is the trend line that you could draw from the top. Yeah, you could draw this trend line actually, but you could also draw this other trend line. Not everybody is going to see the same trend line, and this could be the second one, which could be relevant for this movement. So like this one like this. As you see, I'm drawing this trend line through this point, the candle high, because it's a strong candle. And in this case, I'm drawing the trend line through the green candle close, which is this point here. So two different ways of drawing trend lines depending on what kind of candles you see. These characteristics are very important. Now, what can we check now? We could also look left and see if there is a POC. Oh, yes, there is a POC. Let's draw it. This one. And there is another important POC if you look left, a little bit farther down. So this would be the POC as well. And now we have the main components of this structure. So there is also a very important trend line here. Actually, you can draw it, because this is going to be, yeah, more or less like this. It's not clear, but it could be this one. You cannot match all swing highs and lows, but more or less this could be the level. So it means we got a rejection around this area, which is a confluence level. I'm going to draw it like this. This is a confluence level. Confluence level here. And there is another characteristic which I also explain in my book, what professional traders really use. You can check on the description of this video if you are interested in that. And is this characteristic when you have a huge movement in one direction, it is very probable that you get a retest of the swing, in this case, the swing low, because it was a downtrend. If we had an uptrend, it's also very probable that you get a retest of the swing high. So this also happened in the past with other trends. So if you check on that, it's always very probable. And that's the reason why I think we're going to retest this swing low again. There is only one exception, and is when you get a trap before you get that. If you get a huge trap here at this level, and you get a very, very nice candle here, you could eventually enter long in this area, but you have to check one thing, and is how much space do you have above between your entry point and the next target price you could realistically define according to the volatility we have today. So these are the characteristics and the things you have to check before you enter every trade. As I always said, it's not about having magic formulas, magic algorithms. It's about understanding all these pieces, and you have to make this analysis. Without this analysis, trading is not serious. And of course, it's nice to check on shorts in YouTube and so on. I also do that. But be very careful because they are always showing you only one part of the formula. And you need to do a very, very detailed analysis of the market structure, what kind of elements you have, what could be relevant, and so on. So be very careful. As I'm talking, I'm saying that we're going to get a very nice, a very, very strong candle at, it's not a trap level, but it could also, I'm going to check on volatility. Yeah. And volatility is like this. So I'm going to go like this. It's 4.5 more or less. So I'm going to go 675, 675, 675. Oh, that was a nice candle actually. So I lost it. And we could also check on the higher time frame. And if you check on the higher time frame, you will see that there is an exponential moving average on the way. This is the higher time frame. It's a time frame which is 5 times bigger than the other one. The normal time frame is 1000 T chart, and the higher time frame is 5000 T chart. It means a candle is formed when 5000 ticks has been, or contracts has been sold. And you see now that we had an exponential moving average. That was the range I drew in the smaller time frame. And maybe it's too late to enter here, but actually I like that. I would enter the failure, but maybe it's too late. This was the right candle actually, but it hasn't closed strong. It was not a strong candle. It was a candle with a wick on top. So you see that. So that was the reason why I didn't take it. As you can see, volatility has increased due to these candles here. So you have to go for a bigger stop loss now. I don't think this is going to be a good idea because, as you can see, there is another thing you should take into account, and it's this kind of range now here. This is a kind of a range, and ranges always act as attraction points. And if you have a range underneath and you enter the range above, the probability is very, very low that you get the breakout. So as I said, we had lots of traps along the way, and supports are becoming resistance. Supports are becoming resistance, and that's a characteristic which could repeat here as well. And I want to see a retest of the swing low before we go long. So, and this is also a channel, a kind of channel. Maybe price moves like this till we get this retest, and then we see the reversal back up again. So this is my analysis. Please consider that this is only for education purposes. If you want to enter a trade like this, long or short, just do your research before you do that. And this is the analysis you should do actually before you enter a trade, no matter in which direction you trade. So that's the analysis. This is the S&P 500 mini. Today is March 17th, 2026. And this is the market analysis as always. Please subscribe if you are interested in this kind of content. Give me a comment if you want to know anything else. On the description, there is a workshop and a book if you are interested in that and go deeper into this kind of professional strategies. You have there the information you need. So thank you very much and see you in the next video.